Welcome to ForexTV.com. Today is Thursday, January 29th. I'm Kathleen Reddington with your New York Forex Market Buzz. The yen gains on the majors today. And now for a look at the latest headlines from the CEP News Desk. New home sales in the U.S. fell much more than expected in December to their lowest pace on record. Meanwhile, the median sale price fell to $206,500. New home sales fell to an annualized pace of $331,000, which is a 14.7% decline from November. The previous month's reading of 407,000 sales was revised down to 388,000. First-time and continuing claims for unemployment benefits in the U.S. came in above estimates this week. Ending January 24th, initial claims for unemployment benefits in the U.S. rose to 588,000, following a downwardly revised 585,000 claims in the prior week. Claims were forecast to come in at 575,000. Continuing claims rose to 4.776 million in the week ending January 17th, well above consensus forecast for a rise of 4.62 million and setting a new all-time high. Demand for big-ticket items in the U.S. fell for the third consecutive month in December. Durable goods orders, excluding transportation, posted a loss in December of 3.6%, despite forecasts for a 2.7% decline. Total new orders fell by 2.6% against expectations of a 2% decline. Today we are joined by David Watt of RBC Capital Markets. Hi, David. How are you today?
I'm good. How are you?
I'm doing well. All right, so these low durable goods orders numbers have given the yen a boost today, and it's gained on the euro after the euro had been making some gains on the yen. I want to know what your euro-yen strategy is.
Well, right now I think we're still basically bearish on the euro-yen. You know, yen versus U.S. dollar we're more constructive on, but that's another story. But euro-yen we're still basically bearish on. You just look at the situation in the eurozone, and especially the muddled common communications coming out from ECB President Trichet, and it just leaves you with this underlying sense that the euro-yen is just going to fail to enter any sustained rally. There's certainly the risk of intervention on the Japanese side, but that just seems to be overpowered by the factors that's driving the euro at the present time. And then in the backdrop, you have the risk environment, which is still again indicating that any sort of outbreak of confidence is quickly subsumed by another outbreak of fear. So again, that just leaves a lingering bearish euro-yen market tone.
All right, well, you touched on the yen and the dollar there for a minute. The dollar was mostly lower after today's negative reports, and we haven't really seen the dollar seem to follow reports like this recently. What is your dollar strategy?
Well, we're still largely bullish on the dollar, but again, it's one of those situations where you're not going to get a dollar rally like we saw September through October. We don't have that huge demand for U.S. dollars, that structural demand for U.S. dollars. Instead, you know, the numbers for the dollar are going to have to be much tougher to come by, simply because it is going to rely on actual dollar flows as opposed to this emergency or extreme demand for U.S. dollars that we saw right after the collapse of Lehman Brothers. But that we are in a situation where, you know, U.S. rates are already at rock bottom. If anything, we're seeing on the long end some rates starting to increase, despite the threat of the Federal Reserve coming in to buy treasuries. And so we're starting to see some spread widening in the dollar versus yen. And if you actually sort of look at the dollar over the yen versus the past couple of years, it's actually tracked interest rate spreads quite closely. And so the fact that we're getting some spread widening there actually gives us the idea that, yes, we could actually see dollar strengthening versus yen despite the tumultuous market, which is still basically bearish for the euro versus yen.
All right, and we're seeing equities down as well on this news after yesterday's big rally. Do you think we're going to continue seeing these big swings in equities like this during the week?
Yeah, simply because we're still probing for direction. Like say the S&P gets near 800 and it can't quite break through it, but again, it can't really enter a sustained rally at the same time. And anytime you get an outbreak of optimism, you get another round of layoffs, another round of profit warnings, more news that the U.S. consumer is basically not going to be there to support the U.S. economy through the rest of this year or probably into early 2010. And so it just leaves this lingering sense that equities are going to struggle. And in that environment, and given the news today, other news that's coming out around the world, it just leaves this underlying impression that, maybe we haven't seen the worst news on the global economy yet. And so, again, that sort of undercuts any sort of equity market rally. And again, this leaves any risk-sensitive asset very vulnerable. And again, that brings us back to a bearish outlook for euro-yen.
All right, and changing gears, the Kiwi has dropped after the Reserve Bank of New Zealand cut their rates by 150 basis points. I want to know, do you think this was necessary for them, and do you see any strength in Kiwi in the future, especially with commodities the way they are?
No. We think that they're going to have to continue to cut interest rates, and they might have to cut interest rates through Australian rates, and as a result of that, we've just got this underlying a bearish Aussie Kiwi stance, but again, that just leaves you with an underlying bearish stance versus a New Zealand dollar. You know, they've already had their foreign currency rating put on watch for a negative watch by S&P. You know, so you still have the possibility that could be cut. Is there a risk that that could eventually feed through into the local currency rating? Probably not at the present time because they still are running a budget surplus, but they are still very much exposed to capital flight because the government debt is still held over 70% in foreign hands, and there's always a risk that foreign investors decide to pack up and go home.
All right, David. Well, thank you for joining us today.
All right, you're welcome.
This has been your New York Forex Market Buzz with David Watt of RBC Capital Markets. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.